we talk a lot, people talk a lot about how, it's getting tougher and tougher to get loans approved. Well, it is sometimes and other times not. So here's my first story of the week about how it is tough if you're right at the edge of approvability. My first story is about a divorced father looking to buy a home from his dad. The dad bought this guy a house when he was going through the divorce, and now the divorce is over, and now it's time for him to buy the house from the dad. No problem there. The issue, Steve, has to do with verifying and documenting this fellow's income and his monthly payments for things like credit cards and spousal maintenance payments. Now, last week on the show, which I'm sure you were too busy to tune into, and I forgive you for that.
Okay.
But David and I did a segment on divorce, in which we detailed or pointed out that when a person has to make a maintenance or child support payment, that's just like a car loan in terms of evaluating the borrower's ability to repay the new loan for the house. And remember, we call this thing debt-to-income ratio, and what the government requires us to do to make sure we're making safe mortgages is measure how much is the person going to spend on their principal, interest, taxes, and insurance on the new house, plus there are any car payments they have, credit card minimum payments, student loans, and in this fellow's case, maintenance and child support. And then so it's a percentage calculation. By the way, we get to use gross income before any income taxes, 401k are deducted. All right, so when we come back, I'm going to tell you the problem that we've got with this borrower, and I'm sure you're going to ask me, well, Brian, you're just not a whiner. How are we going to fix the problem?
Of course.
When we come back.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ, and if you have a question, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, Waukesha has been in the headlines this year because of its controversial water situation. How has Waukesha Mayor Sean Riley handled his critics and planning for the city's future? Our John McCure covers that and much more during WTMJ's Conversations, which begins coming up here at 11:07 this morning. Right now, though, Brian Wickert is with us. It's the Accunet Mortgage and Realty Hour here on 620 WTMJ. The devil is in the details, as they say, when it comes to verifying income. That's the situation here.
Did you hear my commercial? Did you hear that one this morning sometime? That's my new commercial this week. The devil's in the details.
Well, of course.
Okay. I thought, what a coincidence. No, you're just a careful, listening radio professional.
Yes.
All right, so we're talking about this case where we got a divorced guy buying a house, and let's just say his income's $6,000 a month. All right. So if you're Fannie Mae, their computer system typically only approves a borrower up to a 45% debt-to-income ratio, which would mean this guy could have $2,700 a month in terms of monthly payments for the house and child support, separate maintenance, credit cards, whatever. Well, we knew we weren't going to make that number. So wouldn't you know, for whatever unexplainable reason, Freddie Mac's automated underwriting system will let you go to 49.99. So in other words, in this guy's case with $6,000 a month, we could go to $2,999. We are currently at monthly debt of $3,050. You're $50 too high. Now, one thing we were hoping, by the way, the debt-to-income ratio is 50.38. And if you're like literally 1,000th of a decimal place over, you don't get the approval. So this poor guy's getting hammered at every turn. He does make overtime. He works for a big, huge utility, but the telecom company he works for will not verify overtime. So we're stuck on that. Then you turn the other way and you go, he says, well, you know what? You're counting too much maintenance against me. I'm really not paying that much. Okay, but that's what the court document says. So do you want to spend 2 weeks going back to, get the court documents revised? Not really. All right, this is the part where you ask me, so what are we going to do?
Yeah, so what are our options?
Good job. Well, a couple of them. One is he could pay down, he could make a larger down payment, and I believe he has the money. So he's got to put down like another $5,900. Remember, it was going to be 5% down. with no monthly PMI, by the way. The guy's got great credit. So, but that's kind of painful. It's like, do that. Or he's got like $7,000 on a credit card, but that's even more money to make his monthly nut go down. Or kind of another painful solution is we could switch over to FHA. It's another federally insured loan because FHA allows us to go to a 55% debt-to-income ratio. Now, when Becky and I bought our first house, my Aunt Audrey sent us an article because she worked at what was then M&I Bank about, here are the rules for qualifying for buying a house. And the long tried and true number back in the early 80s were a housing income ratio of 28% of your gross monthly income and an overall debt ratio of 36%. Okay? Well, then that quickly liberalized to 33% for your housing and 38% for your overall. And now listen to the numbers that I was just spouting off. 45% for Fannie Mae, 50% for Freddie Mac, and 55% debt-to-income ratio for FHA. I don't think we're really that restrictive when it comes to this issue of debt-to-income ratios. I think that's pretty liberal. So in this particular fellow's case, we are going to be able to get the job done, but we're going to have to make yet another adjustment. Either he's going to have to bring more money down, or we're going to have to switch gears and switch loan programs to FHA. Folks, that's one of the reasons why it's good to work with Accunet Mortgage is we have more than one tool in the toolkit, and there are a lot of banks out there will only sell to Fannie Mae, and a lot of banks don't do FHA. So we've got the complete lineup of loan products to help you when the going gets